Good morning, trading world. It is May 15th, 2023, 7:57 a.m. on the East Coast, and this is my pre-market outlook and technical analysis for day trading the markets. The title of today's outlook is Retailers in Focus for the Week. The week belongs to retail, with tech pulling the strings in the background. We have big retail earnings coming this week with the likes of Home Depot, Walmart, Alibaba, and a host of other retailers. Again, more than numbers are what is going to be said about forward guidance on the consumer. This is really, really important. I can't stress this enough. Retail is not, it's not the largest sector, but again, what holds the weight is going to be what is said on these earnings calls when it comes to the forward guidance about the consumer. Then on the technical side of things, the weekly chart is in a topping pattern, and overall we are in a big rising wedge pattern. So we haven't reached the end of it yet, or the apex of that triangle where we're ready to break out, but we are getting close. So I expect some pops back up to the top of the triangle, coming for majority of this week, and then a nice drop at the end to take us back down to the lower portion of the triangle. The outlook on the week for the SPY is bearish, closing below the 411.59 with a harmony between the technical side, which is bearish, and the quant side, which is also bearish. We're looking for a pullback or continuation below 411. And again, we're in a topping process, so you look for these candles on the weekly to get smaller and smaller. So that range, we spend a lot of time in the same range. You're going back and forth. Even though it seems like big swings, we ultimately end up close to going nowhere. With that being said, let's get to the key levels of the day. Alright, here we are with the key levels of the day. Starting on the resistance side, we have our jack resistance at the 413 area. It leads us to the queen resistance. That's going to be the 414 to the 415 area. And then our king resistance, 416 to the 418 area. On the support side, we have our jack support at the 412 area. Queen support, 411 to the 410 area. And then our king support, 409 to the 408 area. Alright, today we want to focus in kind of early around this high 413 to 414 area. This is going to be a target of mine for the day, which is where we could get a reversal from this morning. The main thesis for today is bearish, closing below the 411.59 with a projected target low of between 411.08. Then we have our alternate thesis, which is bullish, closing above the 411.59 with a projected target high of between 412 and 418. The main channel we're in is between 397 and 416. Last week, market strength and breadth opened gap up and began falling almost immediately for much of the day until a bottom was verified around 2 p.m., turning price action up for the rest of the day. I expect strength to open strong and find weakness mid-morning. We do have harmony between the technical side, which is bearish, and the quant side, which is bearish on the SPY. The futures have a bullish bias for the day with dissonance between the technical side and the bearish side. I'm sorry, between the technical side, which is bearish, and the quant side, which is bullish. This brings us to our scenarios for the day. All right, here we are with our first scenario of the day, and I just want to say, like, even with the probabilities where they are, this being the best probability of the three scenarios, that scenario 1 and 2 are actually a lot closer than the probabilities actually point to today. So definitely watching for the first two scenarios at length, those happening, kind of it's growing closer toward a toss-up between those two. But our first scenario is going to be our expanded range day structure. We could get a pre-market pop, which basically extends from overnight. Experience some profit taking early, taking us back down to support. We could get a little consolidation in the middle of the day before going on to close around lows of the day. So this is our expanded range day structure. All right, our second scenario could be our trend day up day type structure. We open gap up, start with a pushback toward the previous close represented by the blue line. We find support on or before that previous close, then begin the uptrend for the day. We usually find our midday chop around either the possible queen or king resistance area. One of the things to watch out for today is that we could get a failed trend day. And you're seeing those a lot lately. And that's just because of where we are as far as the time frame, with the larger time frames being in control, and the volatility popping a little higher back toward the 20 area on days. But just to show you, we could get a failed trend day somewhere around this 414 if we get there early. On a failed trend day, we may not dip as far going back to test that previous close, but if we don't, we get up toward this 414 area pretty early, and then we see pretty much a straight drop from there, taking us back down toward that 409, 408 area, and trying to consolidate there to reverse, but the reversal coming much later, maybe overnight or pre-market tomorrow. So that is our trend day up day type scenario. All right, here we are with our last scenario, and the least probable is going to be our rounded reversal day type structure. We could get a continued push higher toward the Jack or Queen resistance area, find midday chop around either the Queen or King resistance before going back down with the same amount of energy or force that we went up with the first part of the day. That is our rounded reversal day type structure. I do want to make you aware of the vice versa alert. And the vice versa alert just states that we could get a continued push lower. We could get that continued push lower toward the Jack or Queen support area. Find our midday chop around either the Queen or King support area. And then push up the second part of the day with the same amount of force or energy that we used the first part of the day. So that is our rounded reversal day type structure, which is the least probable of the day. As I like to say all the time, is your most important job as a trader is to protect the capital that you already have. We do this by knowing and understanding the risk that we have on in each position, and also understanding the risk in current market conditions. We use that to or I should say, based on the size of our accounts, we use that to manage our risk. So hopefully this helps. Wishing you a positive trading day. Let's go out and make it a great one.